Hello everyone, it's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me and can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. Early. If you cannot hear me or cannot see my So in this live stream, I'm going to start by talking about our previous trade entry on NAS 100 and how that delivered so far. So you can see take profit was smashed on that one. It was an incredible trade, delivered very nicely, tapped our entry position, and after that the next thing was an expansion to the upside. Right here was the entry position on that one, and after that you can see we had this consistent move to the upside. This is currently the 4-hour time frame, and price didn't really slow down after our entry position. It just continued to move to the upside, always sustaining the lows. You can see how every single low stayed sustained from the low that tapped into that position right here, inefficiency. The next low stayed sustained. The next low stayed sustained. This is the next low, stays sustained. This right here is not the next low. This low created this high. This low right here, this is liquidity, and you can see what happened to the liquidity. Price came to the downside, took that liquidity out of the table. The next thing we saw was an expansion to the upside. So currently we're not on the trade anymore. Traders hit our take profit, and we exited the trade at a 1:8 risk to reward ratio. So currently the only thing I'm anticipating to see would be for a potential continuation to the upside, or price would potentially want to come down for a retest at this key level that I've outlined as well. On the 4-hour time frame, you can see this is the last down close candles, took liquidity before expanding to break the previous all-time high. So you can see at the previous all-time high we have low resistance liquidity, and like I always say, you can see how nicely price smashed through that low resistance liquidity. Time and time again I keep showing this on our live streams, and the point is for you to understand that this is very, very essential to know these areas of low resistance liquidity and areas of high resistance liquidity, and how they can affect your trading, where you put your take profit, where you put your stop loss orders as well. Right here you can see if your take profit position was right here, it would have smashed through and you would have closed the trade in profit. Now that being said, let's take a look at what the dollar is doing today. And as you can see, the dollar is showing some strength today. Don't forget, tomorrow we'll have non-farm employment change. We're not going to be streaming tomorrow, but if there's any trade idea, we're going to share with the members as well, only if it's high probability. So that being said, you can see how the dollar is gaining momentum as well. I'm not going to be surprised to see the dollar come as high as this position. Firstly, because this was the last impulse move to the upside, took liquidity before dropping to break structure. That is the first reason why I wouldn't be surprised to see the dollar come in here. Second reason, because we have the inefficiency here. We also have an inefficiency here. Third reason is because this is the equilibrium zone. And if we were to continue to the downside, and if I want to look for a sell, I want to sell at a premium zone. So anything above the equilibrium zone is premium. So I wouldn't be surprised to see price mitigate the premium zone before a continuation to the downside if we're going to remain bearish on the dollar. Another thing to take note of on the dollar is the fact that price is consistently leaving this low resistance liquidities resting right here. So which means if I should for any reason get into a sell position on the dollar, I'll be very confident for this low to go. If we're bearish, this low will be an easy target for price to take the moment it achieves its upside target. So let's say this is our upside target. The moment price achieves that, I would expect to see a heavy displacement to the downside, potentially to run out this low resistance liquidity. So you can see how low resistance liquidity plays a huge part in trading, both in NASDAQ and on the dollar analysis, and also on Aussie as well. You can see how this high resistance liquidity acted as resistance zone, and we rejected off that position. And the next thing we saw was this huge decline in price. And like I said previously, for Aussie, I'm still anticipating to see Aussie run the sell side liquidity. And you can also see how that plays parts both in Aussie, understanding the high resistance and the low resistance liquidity, how it plays a huge role in trading in Aussie, in the dollar, on NASDAQ. Someone who was anticipating for this to go to the downside, stop loss would have been resting right here. And this would have been a safe area. Price coming up to this position, it wouldn't have taken them out. And right now the trade would have been in profit. So let's say this was the entry inefficiency. You can see how nicely prices drop in. Take profit potentially here. First take profit, second take profit position will potentially be here. So I'm not looking for a sells on this. I'm not selling it. I'm not looking for any sell. But if I do see price come down here, I'll be looking for a major buy to continue higher. If we look at the 4-hour time frame, so right now our high resistance liquidity, it has been mitigated, so it's become invalid in my opinion, because price has already come to the upside to mitigate the high resistance liquidity, and it has rejected off that high resistance liquidity. So let's look at the 8-hour time frame. On the 8-hour time frame, now we're seeing clearly low resistance liquidity resting right here. I'm going to outline that, so which means that whenever price decides to go to the upside, this would be an easy target to smash through. So all we're anticipating now is to see a downside move to mitigate our point of interest, our extreme discount zone. After that mitigation, then we'll be looking for a buy for this to expand higher. First take profit position would be this low resistance liquidity. Second take profit position would be this low resistance liquidity as well. And then the key level where we close the entire position is going to be the inefficiency resting at the weekly time frame right there. So if I remove everything on my chart, you can see very clearly. So far, price is acting as if it wants to go to the downside, but it's already focusing on the structure of the market. All I'm looking at is for price to come in here for a mitigation. So that is my analysis. You can see very nicely price is just rejecting, and also how this is aligning with time and price. You have to understand it. Time and price works together hand in hand. The fact that we have a major high impact news tomorrow, you can see how that is affecting the entire market. The market is slowing down, going back and forth, back and forth. You can see how many times we went back and forth, back, forth, back, forth, back and forth, back and forth, back and forth again. So a lot of liquidity is being piled up both at the buy side and also at the sell side. At the sell side, we have liquidities resting right here. At the buy side, we have liquidities resting right here. So with high impact news coming out tomorrow, I wouldn't be surprised to see a run on both sell side and buy side. This is why sometimes when you see a news driver come out, it just goes both ways. Goes to the downside, run sell side liquidities, expand to the upside to run buy side liquidity. So that is what I'm anticipating to see in the marketplace on Aussie. And let's take a brief look at Euro as well, see what Euro is doing. So for Euro, I was anticipating to see a buy on the Euro from this key level, and you can see what happened very nicely. The moment price starts this position, we saw an immediate rejection to the upside to rally above this high. So anyone who wanted to buy, this would have been a beautiful buy entry, and then right here would have been a beautiful close. We closed it there at the inefficiency, run on buy side liquidity. So personally, I'm not trading Euro just because I don't really want to trade so much pairs. I just want to focus only on Aussie, and if I do see a good trade entry on NASDAQ as well, I'm going to take that. But for now, I really doubt we're going to be seeing any major move on NASDAQ. unless with the news coming out, that might just bring in some volatility into the market. But for the week, I have no intention of trading NASDAQ for this week anymore. If I'm going to trade, it's going to be probably next week or something like that. But this week, the only trade that I'll be focusing on is on Aussie, and hopefully that works out. So taking a look at gold, gold has been on a rampage back and forth as well. You can see how gold came to the downside, took liquidity, went to the upside, mitigated the inefficiency, came to the downside again, mitigated the last down close candles, and then we're going up again, taking buy side liquidity. So personally, I'm not really a fan of price action on gold lately. For the past 1 week, I haven't traded it, and I'll be watching it, and I'll personally do another analysis of my spare time to really understand what gold wants to do. But overall, I still remain bullish on gold. So let's take a look at I'll just wipe the chart on this one. So personally, looking at gold on monthly time frame, we can see that overall gold still remains bullish. And if I'm anticipating for key levels that gold could potentially come down into, so right here, 2-month time frame, monthly time frame, the only thing I can see right here is this inefficiency. And if I go to the weekly, the only thing I can see below it is liquidity. And then I go to daily, the only thing I can see right there, liquidity. I look at the 4-hour time frame. So this is showing me a telltale sign there's not really much for me to work with on gold. And looking at it on the 4-hour time frame, the only thing I can do, I can see at the intraday time frame is this. I can see this low, and then I can see a high, and the next thing I'm seeing right here, a break of structure. So if I want to sell, if I want to do anything on gold, most likely it's going to be for a sell. And as much as I wouldn't really want to sell gold because I still remain massively bullish on gold. But this would be my trade entry on gold. This is the only thing I can see right now. So for me to trade this, I would like to see multiple confirmations. Now, this is not me saying I'm bearish on gold. I don't like to counter trend. And in this case, trying to sell gold from here is absolute counter trending. So that is why most likely I'm not going to take the trade unless it looks just so perfect. That is the only time I'll take a trade off here for a sell. But in the meantime, as you can see, this is my sell side liquidity on gold, and I wouldn't really be surprised if price comes up, reject, and run this sell side liquidity. So you can see how I derive my point of interest from monthly, weekly, daily, 4-hour, and now I've derived a point of interest, a drawn liquidity. So this is point of interest, and this is the drawn liquidity. And also take note, this right here, high resistance liquidity, and you can see that is why price has been having a lot of difficulty to smash through that area, because there's a high resistance liquidity resting right here, making it difficult for price to drop below that key level. So time and time again, every single pair, high resistance liquidity plays a huge part, as well as low resistance liquidity, showing us key levels to anticipate for a reversal, key levels to anticipate for rejection, for strong support, and also low-hanging fruit areas. It makes it so easy for us to understand that. And now, if we're looking at this key level right here on the daily time frame, we can see very nicely this is a low resistance liquidity. So that being said, it simply means if we do see that rejection from here, don't be surprised to see a run below the sell side. So that is my analysis on gold. Not really so much to work with on gold. Another thing to look at on gold before I wrap up is the fact that we have a high resistance liquidity resting right there at the highs. So don't be surprised if you do see a rejection from here if price mitigates it. So that is my analysis. I appreciate you all for tuning in. If you do have any questions, feel free to drop it in the charts. Talk to you all next week. Have an amazing weekend, everyone.